Hello, good day, friends. This is CA Saripalli Venkata Raman from Goa. I'm very thankful to CA Sansar and Mr. Vivek Kurana sir for giving me an opportunity to speak and view my points of view and express them to all the friends and fraternity of chartered accountancy on insurance complexities in general insurance. My topic is concerned with policy terms and conditions, claim practices, mode of insurance of various assets at right values for insurance purposes. Remember, this is part 1, general aspects of insurance. I shall be talking on various other aspects of insurance over this web series in different parts at different times. So let us deep dive into the topic. Now, there are two branches of insurance. One is dealing with life, and the second one is dealing with non-life. Just for clarity purpose, I just want to explain to you. Life means if you are taking a life insurance with any of the insurance companies, it could be either LIC or any other private insurance company, it is dealing with the insuring of human beings. And if somebody has taken a retirement benefit policy or a retirement benefit schemes offered by LIC or any other private insurance companies, life insurance companies, also come under the life sector of insurance. The other sector of insurance is non-life. Non-life branches into various types of insurance. One is property insurance, liability insurance, fidelity insurance, marine hull, marine cargo, animal insurance, crop insurance. Remember that health insurance, that is, when I say health insurance, I'm talking about Mediclaim health policies. That does come under, not under life insurance, but it comes under non-life category. Aviation insurance, motor insurance, burglary insurance are examples of non-life insurance. In this video lecture, I shall be only concentrating or only speaking about non-life insurance. Let us go into certain fundamental aspects of general insurance. As everybody knows, what is insurance? Insurance is basically a payment of a premium to an insurance company to safeguard you against a possible or a contingent calamity which could happen to you and which could bring loss to you. So basically, you pay a premium to insure yourself against a possible contingent event. The event has not happened, but it's a possible contingent event which can occur at any time and which may bring you a financial loss. So you pay a premium, and the insurance company, if that event does happen, the insurance company guarantees to give you a compensation towards the loss you have suffered. Now, this is the definition of a general insurance company. Now, what is insurable interest? First thing is, you must be the owner, or you should have some kind of insurable interest in the property which you want to insure. Without an insurable interest, you cannot insure the property. For example, the hotel building belongs to Mr. B. A cannot insure the hotel building because he is not the owner of the property. Who can insure the property, or who can pay for the insurance company towards premium, etc., for the property of the insured property? Is only Mr. B, because he is the owner of the property. Then, remember, insurance is not to make any profits. Insurance is basically a concept where the insurance company pools monies from various people in the form of premiums and compensates a few people who have suffered losses. Our concept should be, we pay premium, but we should not have an intention that we must recover this premium by making any false claim. That should not be the concept. Our morality should be very high on this aspect. Insurance is not to make any profits. And moreover, if a claim does occur, I request everybody not to inflate the claims, because the intention of insurance is not to make profit but to recover your losses. Insurance generally is at cost. Insurance is generally at cost price, except a few circumstances or exceptions, which will come to that later. Next, subrogation rights vest with the insurance company. This means after the insurance claim is paid, the property which is damaged, that is the property which is left there, always belongs to the insurance company, and they have a right to take over that property because they have paid the insurance claim. Right? Next, insurance is basically a fundamental aspect of insurance is the utmost good faith. In the sense, you must declare faithfully and very truthfully and very honestly all the facts and situations of your property before the insurance company and pay the premium, because the premium payment is decided upon the facts and circumstances of the insurance of the property. So if the insured does not declare properly, the premium can be wrong. And moreover, one important thing is, if you make false declarations, the insurance company has got a full right not to pay the claim later on, because you have not had honest dealing with the insurance company. It is a concept called ubermi fidi. That is called utmost good faith. Now, principle of indemnity of losses. The purpose of insurance is to indemnify your loss and not to make any profit. Indemnify your loss means if you have suffered a loss, the actual loss you suffered, as calculated as per the insurance policy terms and conditions, will be reimbursed to you. Indemnify means it will be reimbursed to you. Disclosure of all material facts. All material facts have to be disclosed to the insurance company, based on which the underwriting department of the insurance company will calculate the premium and ask you to pay the premium. Any material or any misstatements of material facts in the disclosure will lead to a claim not being accepted by the insurance company at a later date. What are the advantages of insurance? It protects the property and assets. That is what the purpose of we are insuring our assets or property is only because we want it to be protected, that in case there is a uncalled or unanticipated calamity, we should not be suffering in terms of financial losses. Next, remember, all insurance premium is a tax deductible expenditure. When I say it is a tax deductible expenditure, it means only the insurance premium which is related to business activity, that is insurance premium on business assets, only will be deductible expenditure. Next, remember, once it is a business expenditure, it will be deductible from your taxable profits. Your profits will be calculated after deducting this insurance premium as an expenditure. Obviously, the net profit will come down. So obviously, you will be paying a lesser amount of tax. This means one side you get the protection of the property and the assets from the insurance company, as well as you will be paying a less amount of tax. So basically, I request each and every businessman to definitely go for insurance of the various assets, which I am going to talk about over the whole seminar. It gives you a peace of mind to the owner of the business to plan and carry out a business activity. That is what the purpose of insurance. Next, certain terminology for understanding insurance contracts. Insurance premium, we know that we have to pay a premium. Next, which is decided by the underwriting department. There's an underwriting department in insurance company which will assess the risk and will ask you to pay the premium. Next, when do you think there's a reduction in premium? You must have heard that you have not claimed on insurance for 1 or 2 years or 3 years. Obviously, a reduction in premium is given to you. That means it is basically the insurance company acknowledges that you are an honest payer of insurance premium and you are an honest person, and luckily you do not have any claims. So basically, a bonus is given to you. Bonus means they don't give you in cash. In general insurance, what they do is the premium for the next year will be reduced by a certain amount. Or whenever you're paying the premium, based upon your track record on the previous years, if there are no claim, obviously you'll get a reduction in certain amount of premium. And that is called reduction in premium or no claim bonus. What are the other factors reducing the risk? Like if you are in a business, if there is a factory has got fire alarms or sensors which catch fire, or if you have got a security guard or smoke detectors, these are the things. If you have, obviously the client is, or the businessman is interested in reducing his risk. Obviously the insurance company also will acknowledge that and they will reduce the premium to a certain extent as per their rules and regulations. Insurance claim. So whenever there is a calamity or you have suffered a loss, you put up an insurance claim with all the details to the insurance company, and then the insurance company with whom you are insured will appoint an insurance loss assessor who is knowledgeable in that field and who will come and inspect the loss, find out the various facts and figures from you, and he will give an opinion how much is the loss to be paid by the insurance company. So the insurance company will appoint a person who is their agent, who is a loss assessor, but he is not an employee of the insurance company. He is an independent man. So basically, Objectivity is always ensured. In terms of claim settlement terminology in insurance, what are the things we observe? Excess. There is always a amount which is called excess, which is there mentioned in the insurance policy. Excess is an amount which means that much portion of the amount will not be borne by the insurance company. It will be borne by the insured, that is the person who is paying the premium. For example, if a loss is 10 lakhs and the insurance assessor has assessed the loss at 8 lakhs and the insurance policy says the excess is 1 lakh, that means you will be paid 8 lakhs minus 1 lakh, only 7 lakhs will be reimbursed by the insurance company. That means the excess or the amount which is mentioned as excess in the insurance policy has to be borne by the insured himself. What is the salvage value? The damaged value of the assets which can be sold is called salvage value. Now this value, salvage value, is important because if you decide with the insurance company that the salvage you want to keep it, and obviously the salvage value also will be deducted from the amount of the claim payable to you. Other option is you say that I don't want to keep the salvage, and the salvage will be taken over by the insurance company and they will pay you the claim in a normal way without deducting the salvage value. Now let us go into what are the various types of insurance policies. Now you will be seeing a big list of insurance policies which each of the business undertakings need to insure. There is what is called fire policy covering all the assets. I shall come a little bit in depth over a period of time. Burglary policies. There is what is called a money policy. There is a fidelity policy. There is a goods in transit policy. There is office contents policy. There is what is called business all risk cover. There is what is called electronic equipment policy, loss of profits cover, workmen's compensation cover, public liability cover, motor insurance policy, householders insurance policy, contractors all risk policy, and missionary policies. Remember, each of the business undertakings need to have all these policies in place to safeguard their business and assets. It's a very important thing. Many of the business people fail to understand this aspect, and they either take a fire policy, but that also fire policy also they will not take properly, etc. And while giving a list to the insurance company, they do not distinguish the various assets properly, and they will give a consolidated figure of assets, etc., which is not right. Let me take you to each of these policies, how they are and what they cover. Fire policy is an important policy to insure all the business assets. You know very well, fire, when it occurs, it does not tell you, okay, I am going to come. No, it will not tell you that. It can come by any means, by due to any short circuit or by any other reasoning, it can come. And once fire comes, you cannot stop the loss. Loss will be there. How much will be the loss? We can reduce the loss. We can reduce the loss by having fire sensors or by having other fire fighting equipments, etc. Right? So fire can cause damage to buildings, it can cause damage to plant and machinery, it can cause damage to furniture and other assets. It can also cause very much damage to stocks. It can also cause damage to computer equipments, etc. of any business undertaking, and you should insure against fire perils for all these types of assets. Remember, fire policy is a specific location policy. That means fire occurring in the specific location which you have disclosed to the insurance company, that your factory is located in so place or your stocks are located at so and so place, your computers are located in so and so place, and if a fire occurs at that specified location, then only the insurance company is liable to compensate you for the loss suffered. Suppose, just an example to understand, you've got computer equipments. You have insured for computer equipments. Like I'm talking about not a laptop, but a normal desktop computer. Now, you took the desktop computer from the factory, you removed it, and you took it to some other place, maybe at your house, etc. And the computer equipment was damaged because there was a fire at your house. Now the question comes to you, whether the computer equipment will be entitled to the claim or not. In my sincere opinion, computer equipment will not be entitled to the claim. The reason being, the computer equipment has been mentioned at a specific location, that was at the factory, and if it is damaged elsewhere, it is not covered. For that, what type of policies to take and all that, we'll come to that later on. Burglary policy is also an important policy for business undertaking. It also covers for only a specific location, right? Now, burglary policies is a very important thing, because remember, if somebody says I have a fire policy, it doesn't mean that he is covered for burglary. And if somebody says I have a burglary policy, it doesn't mean he's covered for fire. There are two different categories of losses which have to be covered by two separate kind of policies. The premiums are different. Obviously, the premiums are different because the nature of risk is different, but that the premium will be determined by the insurance company. That is not our problem, but we have to make sure that your business entity covers both these policies. Next. What is a fidelity insurance cover? This cover ensures insurance against a misappropriation of goods and money by the so-called trusted employees of the business undertaking. Remember, whenever a burglary occurs in a business organization, the burglary occurs because of outsiders entering into the business premises by force or by damaging the locks, etc. So basically, it is an unauthorized entry by outsiders is called a burglary. But here, employees are already working in your organization. They have got a complete entry into your business in a normal way, but they steal the goods or cash. So a burglary insurance never covers this theft of goods by employees or theft of money by the employees. A theft of goods by employees or theft of goods or money by employees is only covered by fidelity insurance policy. So many people do not know the difference, and they say I have a burglary cover and my employee has stolen the goods, I should be paid, and they simply fight with the insurance company. That is not true. Fidelity policy is a separate thing, and you need to cover in a fidelity policy only the employees. Next. This policy is a must for all business undertakings for the goods which are transported into the factory, and also for goods which are transported out of the factory, either by rail, bus, truck, ship, boat, or by flight. Remember, the word is marine. Marine does not necessarily mean it should be by sea or water. According to the insurance policy terminology, marine includes rail, bus, truck, ship, boat, or by flight. And this is a very important policy, because if you do not have this policy cover, and if you suppose you have purchased some goods from Haryana, and if you are under the impression that since you have purchased the goods and they are being transported by a truck, and if you are under the impression that truck owner will be responsible for the loss in case anything happens to those goods which belong to you, it's a wrong notion, my friend. You will suffer the loss, because the truck owner, the lorry receipt will clearly say that they are not responsible for any losses which occur during the transportation, except for a minimum amount of 100 rupees or 500 rupees, as mentioned in the lorry receipt. If you look at the lorry receipt very carefully, you will understand that. So you need to have this type of an insurance policy. Now, coming to electronic equipment policy. Electronic equipment policy is meant for all computers and accessories. Now, all computers and accessories have to be insured under this policy. At times, people don't understand this aspect and they insure the electronic equipment, that is computers and accessories, under office equipment policy, which is not right. Because if there is a claim later on, the insurance company will say that you have not informed us that you had computers in your office equipment, and they might even deny the claim. Right. Now, coming to office contents. Office contents policy covers a specified location for all office equipment, that is office furniture, fixtures, and any other equipments, typewriters, and various other equipments. But generally in office contents policy, it does not cover computer equipments, because computer equipments have to be insured only under electronic equipment policy. Now, office equipment policy does cover fire, and it may also cover burglary if you have insisted upon, and or you told the insurance company that you want burglary cover as well, and some additional premium will be charged. Now, business all risk policy. This cover is required for all electronic equipments which are carried from place to place. Now, for example, if you are carrying a laptop, now a laptop which is carried, or a cell phone which is carried, or a digital camera which is carried from place to place, will not be covered at various other places if their loss occurs, unless you have a business all risk cover. So, for all such type of equipments which are required to be carried with you, please don't include these assets in the normal business policy of office equipments, etc., or under even electronic equipment policy. Please include them under business all risk. So when such equipments are stolen or damaged, or they catch fire, or whatever it is, any damages will take place anywhere in the world will be covered under business all risk. Now, under business all risk, all risks of loss or damage to any of the assets insured under this category anywhere in the world will be covered or insured. The risk location is anywhere in the world and not a specified location. Then what is a public liability cover? Now, public liability cover is to cover risks to the customers of a business or anyone working in the office. For example, the office floor is under cleaning process, and the sweeper or the person who is cleaning the floor has to necessarily put up a board that the floor is under cleaning process, and it's a warning to people who are walking in the office. Now, if such a board is not been put up and a customer walks into your office and slips, he can file a suit. Such type of suit or damages are very common abroad. In India, we just generally ignore it. So it's a public liability cover for such type of a thing. Next thing is, another example could be like you're entering a bank and The banks, most of the banks are old premises and all that. Some cement slab falls on your head, falls on the head of the customer. Who is responsible for the damages to the customer? It's actually the bank, because he has entered the bank and is a customer of the bank, etc. So obviously, such type of losses, if a customer files a suit for such type of a loss that he has suffered damages because of a brick falling on his head, so the bank will have to pay from their nose. So if they have a public liability cover, they can recover that money from the insurance company and give a safety to themselves. Now, contractors all risk. What is a contractors all risk cover? For building contractors, builders, subcontractors, this cover is very essential. During a construction or after construction, if a certain portion of the building collapses, and if you do not have a cover of this nature, what will you do? You will have to bear the financial burden or the loss. So, most of the builders generally have a contractors all risk cover, because anything could be the cause for a building collapse, and this loss should not be borne on the business. So they pay an insurance premium, and the insurance company will compensate them according to the policy terms and conditions. Next, workmen's insurance policy. Now, generally workmen work in various factories, and it is compulsory by law that the factory should take a workmen's insurance policy, and the policy compensation, etc., is as per the policy terms and conditions. Now, coming to insurance coverage of motor vehicles, which everybody wants to know. For motor vehicles which are used in business, there are two types of insurance covers available. One is own vehicle damage. The second one is third party damage to the property or vehicles of third parties. Now, in India, own vehicle damage is optional. That means if you take this insurance policy which contains own vehicle damage, that means if any damage occurs to the vehicle which you are driving, that will be paid by the insurance company subject to the terms and conditions of the insurance policy, subject to an assessor coming and assessing the damage. And if your vehicle causes a damage to a third party's property, which could be a wall, or causes a damage to the vehicles of third party, that is called a third party damage. Now, third party damage vehicle insurance is compulsory by law in India. Without a third party vehicle insurance, third party damage vehicle insurance, you cannot run the vehicle on the road, whether it is your business vehicles or even with your private vehicle. So it is compulsory by law, and as per the Supreme Court order, now 3 years minimum compulsory premium has to be paid in respect of third party damage. And own vehicle damage, it is every year you will have to pay for the premiums. So basically, own vehicle damage and third party damage together are called comprehensive vehicle insurance. Missionary policies. Specific policies are available with insurance companies for additional coverages for various types of industries depending upon the needs of the industry. Those are called missionary policies. Then, many people do not know about this. There is what is called a loss of profits cover. Due to a devastating fire, a factory is burnt, production is stopped. Obviously, there is a loss of sales. Once there is a loss of sale, there is a loss of profit. This loss of profits can be covered by paying a certain amount of premium as determined by the insurance company. It can be covered for a maximum period of 6 months, or the till the factory commences operation, whichever is earlier. Thank you for a patient hearing of the general policy terms and conditions available to various with various insurance companies. And if you like I'm sure your people will like our presentation, and if you like, please subscribe for the channel and kindly say that you like the channel and you can vote for the presentation. And furthermore, if you have any queries, my cell number is there, my email address is there. I can answer them. Next, if you like my presentation, kindly tell me whichever topic you want me to speak in future on the insurance. I will definitely make a presentation on the topic which is requested for. Thank you very much for a patient hearing.